UnitedHealthcare stock, ticker symbol UNH, is down 55% in the past year because of a lot of reasons that we will see later in this video. So let's do an in-depth analysis of the company by looking at the financials, the forecast, some important statistics, as well as using my spreadsheet to calculate the intrinsic value of the company. Starting with their financials, UNH revenue has grown very consistently over the past 5 years, growing at an average of 10% annually from $250 billion, and it is currently at $422 billion. If we take a look at their profit, their net income has also grown pretty consistently over the past years, with the exception of 2024, but it has recovered since then, and it is currently at $21 billion. And one thing that I really like about this company is that it has even more free cash flow, and it is currently at $25 billion. And their margins have been pretty consistently at around 5% over the past 5 years. And free cash flow margin has been a bit higher at around 6%. And if we take a look at the financial forecast, growth is expected to continue with revenue growing all the way to $514 billion in 3 years, which is around 8% per year, and EPS is expected to grow to $29.56 per share. And this year, it took a big hit, but as you can see, it is expected to recover. My spreadsheet tells me what returns we would get on our money if we invest in the company today, according to our assumptions about the future. The stock is currently trading at $250 per share, and according to my low assumptions, you would get an 11.9% annual return on your money, middle 24.4%, and high 35.4%. So huge returns according to my assumptions. This also means that if we want to calculate the intrinsic value, we need to put a 10% desired annual return because that's the market return, and this means that the intrinsic value is between $276 per share and $819 per share. And I believe my assumptions are reasonable. I did a 7-year analysis, and I assume they grew revenue between 4 and 8%, which I think is fair, profit margin and free cash flow margin between 4 and 8%, and I assigned a P and price to free cash flow at the end of the 7 years of 14, 16, and 18. By the way, these returns include the dividend, and right now, they are paying a 3.5% dividend yield, and it seems pretty safe as the payout ratio is only 36.8%, which is what percentage of their profit is used to pay their dividend. If you want to get access to this spreadsheet, I'm going to leave a link in the description below. The spreadsheet does not take into account the balance sheet, and UNH has a decent balance sheet with $32 billion in cash and $79 billion in debt, which is not a lot of debt for a company that has a market cap of $227 billion. Moreover, the stock is clearly trading cheap as we have seen on the spreadsheet, but the current PE ratio is 10 and the current price to free cash flow is 9. So the financials are great, the valuation is even better, so why is the stock down? Well, I've summarized it here, so let's quickly go through it. So on February 2024, they suffered a massive cyber attack which caused earnings to go down. Then on February, the DOJ launched an antitrust investigation into UNH's acquisition of Change Healthcare in early 2024. Then on October 2024, the CEO, as you probably know, was tragically murdered. Then on April 2025, disastrous Q1 earnings, and they lowered guidance. On May 2025, the DOJ had a criminal fraud investigation. This news caused the stock to go down 13 to 17%. And finally, on May 2025, leadership shakeup because the CEO, Andrew Whitty, abruptly departed on May, shortly after suspending the 2025 earnings forecast amid continued cost pressures and regulatory scrutiny. As you can see, there are a ton of risk in investing in this company. However, in my opinion, it is trading at such a low valuation that it's worth taking the risk. I hope you found this video valuable. Let me know what you think about UNH stock in the comments, and I'll see you in the next one.